Good morning, everybody, and welcome back to Schwab Coaching. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner. A beautiful morning here in Denver, Colorado. Today, I am pleased to be joined by my friend and Schwab's regional investment strategist, Michael Urizzo. Hey, Mike, it's good to see you, man. It's been a little while since I've had you on here. How you doing?
Very good, very good. Yeah, I feel like we kicked off the year pretty strong with a great conversation, and it's been a few months. So yeah, look forward to today.
Yeah, schedules getting messy after a little bit, don't they? Between travel and plenty of hosting going on for me, for sure, but plenty to get to this morning, of course. We've got some big headlines over the weekend. We have a really strong finish to Friday's action, maybe confounding a few of us out there, traders who were watching the way things worked on most of the week. It was a very interesting finish. So plenty to get to on the charts with all of you. Take a minute and say hi to Connie Hill there in the chat. She's there today to manage the discussion on the chat side of things, Q&A. You are all welcome to post in there for the 45 minutes we intend to be here with you all today. Of course, Mike and I will watch the chat as well and try to reply to your questions live and in the moment too. So please feel free posting in there for the duration of the show. If you're not already doing so, Connie and I would appreciate a follow on X, Connie Hill CS and Kevin Horner CS. A good way to get with us outside of the shows we host, everybody. Try to post there for you throughout the week. My particular approach is to just post as many notable charts, things that stand out to traders, things that we're watching, stuff like that. So if you're looking for charts on Twitter or X, that's a good reason to follow me for sure. So with that, let's get into some disclosures here, everybody. Please remember that our conversations here are exclusively for your information and your education. We do not make any recommendations or endorsements for a particular approach or strategy to trading the market. We do talk technical analysis, though, here. Of course, remember, technicals should be considered part of a very large puzzle, just one piece of the decision-making factor. We do not encourage you to base decisions exclusively off technical analysis. If you're a new viewer of the Trader Talk segment, this is the approach we take here. We do a top-down review of the broad market, starting with our major indices. We examine some of the individual sectors of the market that might be moving around, looking in some individual equities as well, stocks in the news. Got a few of those today. We're definitely going to get to at least a brief discussion around what was announced yesterday by the Trump administration in regard to crypto. So plenty to talk about with you all today. So Mike, let's start us off with a look at the SPX, that green candle, after having made a new short-term low, short-term in the sense that it was the lowest we've traded this year, certainly brought some traders right back into things though, didn't Mike? I mean, that was a really nice candle on Friday, all things considered.
Yeah, after obviously, for lack of a better word, maybe a little bit of a torture the day before there, and kind of a little bit of a slide as we saw, but kind of fell right into that night, a little bit of a range where we've been getting a little bit of bounce there, and we've seen some demand, i.e., some buyers kind of be a little stronger in their pricing and push prices a little higher. RSI just sitting right in the middle there of kind of note two. We're sitting, so we're below a little of those two shorter. I believe you got a 20 and a 50. Yeah, perfect.
That's right.
Averages up there, right? So we broke both kinds of those, but like to your point, tried to rally back, couldn't quite get above the previous high from the day. But it looks like today we're trying to make that move a little bit here, and we're kind of testing that 50-day moving average, which is always going to be fun to watch, so to say.
Well, it's definitely an important one, right? So many traders watch it, and one of the takeaways that I think some traders will note is there's a little bit of a downslope to it, Mike. You see how that in the last week really started to reflect that downward trajectory in the 50-day. Does that kind of stand out when you're looking at this? Because we talk about how resistance can be more resistant if you pick a level. When you're looking at it from a moving average standpoint, you want that moving average to be upward sloping entirely. It's a little bit more difficult in some cases to get through a downsloping major moving average like this. Does that present at least some knowledge that maybe if you didn't participate on Friday, let's say you did not buy up the bottoms on Friday, are we still looking for a little bit more from the SPX here to kind of validate the work we're doing to get back into trend?
Yeah, and kind of to your point, right? Even though that looks like we're looking, what call it, 6 months or so of some data here, specifically in this kind of zoomed in version of the chart, it doesn't really look right. We still have a nice, upward momentum in the trend. You see all three moving averages kind of have, all in kind of upward momentum. But again, you see this volatility, right? So we're kind of ebbing and flowing around that mean. And that's expected, right? So as we're kind of creating these, short-term lows here that we're bouncing off of, it's not really surprising to kind of see the shorter-term average cross through that and kind of, pretty choppy, right? In the short term here, even like I said, we don't think of these candles as too big. I mean, looking at the size of the range of all these individual candles, we got some really, really outsized moves. So yeah, I mean, the 200-day is still got a nice positive uptrend there a little bit, right? In the momentum of it, so to say. However, there's a little kink there, right? So it's going to be interesting to see this convergence, and we're getting a little closer. I mean, that last candle there, even the beginning of Friday, to your point, even though it was a good day, it's kind of flirting towards that 200-day, right? It doesn't look like it's going to take much to kind of get it to want to touch there. So I think looking at it just from a wide angle lens over the next couple of weeks, I would almost expect it to try to at least trend towards that line, or maybe even try to hold it pretty well.
Well, I think a lot of us would like to see that. A lot of traders in particular want to see that recapture just around 6,000. We know that 6,000 was an important level on the way up. It became support on the way down a little bit. We've bounced into it 1 day, 2 day, 3 days here before we made that low. And now we're right back to it. So I just want to reiterate the importance of that ledge at 6,000, former support, potential resistance. And of course, if you're a short-term trader, you're going to want to look for some short-term indications that things have really fixed themselves. So making note of the 50-day today being at 59.97 or just shy of it. Let's zoom into the 5-minute bars. Let's make note of the fact that we gapped above the pivot from Friday's price action. That's a great entrance for us. But starting to the day, that is. But look at that R1, 59.86 or 59.97, 97 right there, right to the 50-day, Mike. So that tells us R1 is coincident with the 50-day moving average. If we lose steam on a short-term basis intraday this morning at that 59.97 ledge, we might want to make note of that. Okay. Clearly, if we can get through it, we might see a little bit of exuberant buying perhaps as we push through a major zone of resistance. But we like the start to the day from the bounce side of things. But what I'm just going to throw a little bit of cold water on things, because from a trend standpoint, we want to see some clarity above the 50-day moving average, everybody, ideally for traders on a closing basis. I don't think I'm saying anything that those of you that are here frequently haven't heard before, right? We're always looking for some semblance of confirmation when we can get it. All right, so that's a quick look at our SPX, Mike. Let's move on into the NDX. We're getting a little bit of a lift here. The bounce back in growth certainly benefiting the NASDAQ 100 versus the SPX. But notice, Mike, that we've already seen a little bit of selling here into the open. Similar story, though, right? The only difference here is that our bounce back this morning has not been as significant in the sense that we're not up to the 50-day just yet.
Yeah, and obviously losing steam, from its current daily high here, or intraday high that it kind of made right out of the opening there. And kind of to your point too, right? I know we did this a couple months ago when we were looking at the SPX and then the NDX and just kind of seeing what's going on with the larger indexes, and realized that a lot of course, always worth saying, right? A lot of the stocks that are constituents of this NASDAQ 100, a lot of them find themselves in the S&P as well, right? So just want to see that collinearity, so to say, because it seems like there's a little bit of a disconnect. Again, this uptrend is not nearly as sharp as it was in the S&P. It's a little smoother on the way up. But again, you see it well below the 20 and the 50-day in this one, trying to retrace. And looks like we're kind of right in the middle between that 50 and 200-day moving average. But like I said, the overall trend, even going back towards September 9th, in that area there, we got a lot closer to that 200-day moving average, right? So not surprising that, given the larger constituents of this index, that we're seeing a little bit of downside with, again, what we see every day of the week, right, is some sector rotation or internal rotation through the indexes. Right. So this just kind of proves that point, I think, again, for us.
Yeah, I think so as well. It's a good start to the day, but again, we don't like a fade really quickly. Now, that doesn't mean we can't hold up. Watch that exponential 20 period EMA. Some traders will watch that from a standpoint of, can we stay trending for the day? that 20 period can be used by some shorter term traders. Again, you'll notice, right to the resistance, right to R1. But if we can hold the uptrending exponential moving average through here, break out through 2175, 21,075, we might have some continuation of upside here. But again, good start, great bounce on Friday, I should say. Let's get to that on that. Great candle on Friday. It's nice to see that we gapped the open. Let's not find ourselves working our way down Friday's candle. That would be less of a happy development today. So we'd like to see us hold up with today's open initially here. Now, if we move off of the NASDAQ, the area that saw quite a bit of volatility last week was the Russell 2000. Broke down. It looks like a continuation of something that we've been speculating might be happening, Mike, and that's the significant breakdown of small caps in the face of a higher for longer interest rate environment, sir. Yeah,
and there we are through the 200-day, right? So again, really not too much of a surprise. I think we talked about this at length through the period of last year, watching the Russell pretty closely, and it kind of struggled a little bit there, and it's been off of its highs for quite some time, right? So we've been seeing a little bit of a breakdown. But again, these are the indexes that kind of lagged last year and finally started to break out and make that kind of movement. So, in my mind, it's really not too surprising to see some of these stocks struggle, especially, we're in this odd interest rate environment again, right? Even though it feels like we're in this neutral environment of rates, right? We're seeing short-term rates actually rising as, the Fed has obviously been cutting. So it's going to be really interesting to see how this year shapes up. And I think the Russell is going to be the one to watch, of course, to kind of see where the overall market trend will be going.
I think so too. That low down here was significant for us. The question becomes: is that a flush out move, or is that just a bounce spot? Right? Flush out might give you the belief that, hey, we've got a chance to start or a new continuation trend. But for a lot of us, Mike, that means we got to get through that red line up above. And before you can get through the red line up above, you got to get through a few major moving averages. You got a 200-day that looms above here, about 35 points. You've got a downsloping 20-day, a downsloping 50-day. This is notable. There's a lot of resistance above and overhead for the small caps, which makes sense in the grand scheme of things, doesn't it, Mike? Because the conversation we've seen of late, in fact, the Russell started its slide before the conversation started to validate the move in the Russell. It's a great reminder, Mike, of the way that these charts tend to act. We get these moves to the downside sometimes in advance of the narrative catching up. And it seems as though the narrative has finally caught up to small caps.
Yeah, without that, and like I said, I think it goes back to a point that I've been trying to drive, and I mentioned earlier, right? We're watching some of these internal indexes have some rotation within sectors. So, this is an area where some of those sectors are going to, be a little bit more exploited, so to say, because of the nature and a little less liquidity, not necessarily as large as the stocks. So maybe a little easier to move this index around, for the overall market or the institutional side of it. And kind of to your point, right, we're through that 200-day moving average. So we're kind of sitting right kind of below the longer term mean, which again is not necessarily positive, going to definitely cause a little resistance there on that 200-day. But when we look at it top to bottom, we're still kind of in that middle of range, right? I feel like we have that 2100 level. If we're looking back a little further, might be a little bit of a short-term support. Even though that's quite a ways from where we are, maybe that is some area that we're trying to retrace back in there and see if we could do some work and see if we can get some more demand to kind of step up, so to say, at those levels and start to price.
Yeah, we had some action back there at 2100 previously. So that would stand to reason as well in terms of a potential bounce. I mean, obviously, our hope is that what we've got is an end to the current drawdown, and that Friday's low, would end up being the low of the pullback. That would be amazing because today, for example, we've already traded through the low, the high price of Friday being our low day in this pullback, the lowest we have traded in the midst of the pullback. So what we want is a close today over Friday's high. So far, we're on it. That's fine. But we'd like to see some improvement there. There was a question in the queue here looking at the RSI. Great question, Cola, about the RSI being sub 50. This always comes down to what is the current trend we're looking at. Let's do this just briefly. Let's jump back to the SPX and show a little bit of a discrepancy in here, Mike. One of the things that I've noted, if I just look, yes, we made a new high in the SPX a couple weeks back at 61.47, right? But ultimately, we've really been range bound in this zone for the better part dating back to November, right? And that's since going back to the election. That's really what we've seen is a pretty rangy SPX, 5,800 to 6,150 ballpark. Notice in the same window, everybody, if I zoom into it, how the RSI was only reaching that overbought condition when we peaked here originally. And since we have been completely sandwiched, Mike, between 30 and 70. So we've seen sideways consolidative action, both in the RSI as well as in the price action of the SPX. What I want to point out here is that these lows at 30, these are where the 30 becomes our oversold, 70 becomes our overbought conditions. In these sideways trends, RSI makes sense using those standard details, everybody. But when you start to trend, things shift. And you can't rely necessarily on 70 being your overbought condition and 30 being your oversold. For example, when we look at the Russell, which is now in a downtrend, making new short-term lows, validating those short-term lows in price with a new low in the RSI, Mike, the concern here is if we bounce into any higher levels, maybe our RSI only gets as high as 50 to 55, meaning our overbought conditions could be relatively lower in the RSI than they normally are. And notice we've got a pretty decent downslope to our RSI as well. And you can absolutely apply support and resistance details to RSI calculations too. So the question about whether RSI under 50 is bearish, it can be if 50 is acting as resistance, Mike, on any bounces in the midst of price action, right? Is that something that you're keeping a close eye on too here, noting what we've seen with the RSI, just in the Russell specifically? We can do the same in the NDX here in a second if you'd like.
Yeah, absolutely. I think, the challenge with this conversation for me is always when we talk about, the data points or the standard bearer data points. In this case, we're looking at a 14-period moving average on a daily chart, right? So we're looking at a 14-day moving average. Realize, again, to your point, right, correlating that, we're looking at a 20, a 50, a 200, a lot of moving numbers here, and we're watching support and resistance, right? But how does that correlate? The point being is that 14-period average is, every day you get another day's worth of information, right? So we're only looking back 14 days. So to your point, you want to look at a little bit of a wide angle lens when we start to touch on these levels to make sure, the differential. So even if we moved out the RSI here to like a 20 or a 50-period moving average, you're seeing a very little bump up in the bottom number there, right? So we're at like 35 going towards 40. So still well below that 50 to your point. And I think that's how we can kind of correlate things back. The one thing I want to say out loud and always remind clients, and I have this conversation literally on a daily, making sure that your periods, simple moving average, we're looking at a 20-period moving average. You start to look at a weekly chart, you can't, it's apples and oranges, so to say, right?
Yep. Great reminder, meaning if you're trading for the short run, don't pay attention as much to the 200-day moving average, right? Because infrequently will the 200-day moving average be in play for the shorter term trader. It might be now that we've seen some major pullbacks. Some of you short-term traders might find the 200-day to be as in line with short-term support as a 20-day, but when you are trading in the midst of an uptrend and the stocks are making new highs and so forth, and your pullbacks are limited, often those are going to find support at these faster moving averages more than the longer ones. So I found that to be a good point, Mike. Hey, let's look at while we were just talking about the Russell and what we've seen here. The biggest difference in the Russell of late has been with the rates. Rates have come down and the Russell's getting hammered. Mike, I was sold a bill of goods that when rates come down, the Russell should be using that as a reason to jump. Unfortunately, it's all tied to the health of the economy here now, suddenly, isn't it?
Yeah, and that conversation is ever flowing on a daily, right? I mean, I think, people are, you hear, this is when all the pundits kind of come out of the woodwork and everybody has these strong opinions over the long haul. And then we see intraday volatility kind of, diffuse some of those opinions or negate them. So, this is another one where it said, like, we're in a weird interest rate environment, clearly, where we're seeing rates kind of bouncing all over the place in the short term. and looking for that long-term guidance to kind of right the ship, so to say. Yeah, I think this is just another area where it gets a little murky, right? As rates come down, you think about all those sectors that would benefit from lower rates, and it's not really working, to your point. Obviously, the Russell kind of being one of them. But again, those small mid caps, right? The real estate space, we're seeing a lot of weird volatility on an intraday, especially at the single stock level, right?
Yes,
things are repricing.
Yeah, trying to reprice, figure things out. Are we in the midst of distributing all of these dollars, or are traders still supportive enough to get us some bounces? We're going to look at some of these significant moves in a few of these individual equities momentarily, everybody. Before we do, I wanted to look at the SOX. Mike, this stands out. I don't like what I'm seeing here. Great spot for a bounce. What happened? We opened bullishly, opened through Friday's high, and now we're selling down. Mike, is this a potential concern here? Do I need to change my green support line to a red potential resistance line? I'm going to do it.
I mean, I'd almost, to your point, kind of go with it, right? We broke through that channel to the bottom of that channel now, and we're definitely going to think that should at least give us a little bit of resistance in the short term. You're kind of seeing that happen today, even though we got just a little bit above it. I think that the challenge here always, too, and reminding folks is, when we draw these lines, right? I mean, we could be off by a few pennies here, a few dollars here or there, give or take. They're relative values of support and resistance. So, yeah, I still think you could use that as a relative resistance at this point until the chart proves otherwise, or until we get some news from the semiconductor. But, man, again, this is one where the internal rotation, the way these stocks are moving around, the volatility at the single stock name is just really through the roof. And I think we know the players that are kind of causing this. But again, there's still that posturing from a geopolitical level, right? There's a lot of border to border type of conversations going on, so to say. The tariff conversation is still out there, causing all kinds of crazy concern and standing the hair up on the back of folks' necks out there. And maybe we're seeing the market kind of maybe overreact a little bit here in this sector. But yeah, I wouldn't feel very confident looking at that chart at the moment from a support.
I would love to tell you otherwise, and I want to battle with you on it. I just can't. The fact is, you're getting a pretty good rejection at what should have been a level of we needed to trade through today. Now, that doesn't mean we can't, guys. Everybody, it's 22 minutes. Okay, I'm not going to get too far down the path here. What are we looking for? Well, we opened above the pivot. Now we're below the pivot. Reminder, the pivot is purple line here. We need to recapture that. A rejection after having quickly fallen back beneath it is not going to look great on a short-term basis. I don't like the fact that we've seen a lot of pop being faded in this first 20 minutes. That stands out. Again, it doesn't mean it can't reverse course. If we take a look at the way things worked on Friday, for example, it was a very clear move that happened very quickly. Let me make this a 5-day, 5-minute from a 1 day. You go back to Friday at the lows in here, right around the noon or the last 2 hours of the day, you can see how aggressive we moved to the upside. We popped really well, 46.70 to close at 47.60. So we added 160 quick points in the final 2 hours there in the SOX. And the same is true about the NDX, the SPX. Those also saw the same thing. But unfortunately, we are seeing fading as we ran into resistance. So the question becomes, is today more of really what led us down last week, more of broader concern in the market tied to so many different factors. Now, Mike, over the weekend, the big news was, you mentioned the VIX. I'll just take a peek at it. It's climbing. We're up 4.5%. We're holding the 20 level now, Mike. This is starting to get a little bit more heads up. Again, volatility does not necessarily mean negativity, just swings. Bigger moves in the broader market can be anticipated with a higher VIX. Mike, do you see, does this stand out to you as we climb even further here? VIX cruising now through 21. These elevated levels give us a little bit of a heads up.
Yeah, definitely. I mean, it's definitely worth always, kind of exploring a little bit deeper into what's going on in the underlying market. Again, kind of seeing some of these indexes and some of the, convergence, divergence within those indexes, correlating to themselves. But, we're kind of getting right at those, we'll call it fairly normal highs for the VIX that we've kind of got accustomed to. We really haven't seen that huge sharp move. But to your point, the trend is moving higher. So, that volatility expectation seems like it's going to continue to get a little stronger. The story's going to be a little stronger. And bluntly, right, we're coming into, we just started the third quarter, or we just started the third month of the first quarter, sorry. So, coming through March here, it's going to be really interesting. You got a lot of earnings behind us, but it's going to be really interesting to see how things start to price, especially to your point earlier, looking at some of that kind of rate dropping off. Like, is that going to be an opportunity, or is this just going to prove, to be more of a challenge for the second quarter? I think the expectations are that the market is going to ebb and flow pretty strongly. We're going to see volatility start to pick up a little bit as we get further down the year here. And, now we've priced in a lot of the administration changes, albeit daily tons of changes to still kind of consider. But I think some of the major moves, some of the major positioning has kind of already been established, and now we're kind of seeing it come to fruition. So again, I think the market's going to continue to price this. So I wouldn't be surprised to see more volatility kind of in our future. But again, it turns on a dime, right? One piece of news today, and it can kind of settle all minds. And all of a sudden, we're right back there. I'm thinking about the S&P from the moment we talked in January, kind of kicking off the year. Saw tremendous volatility, a lot of selling off. And, within days, it's like we just retraced all that sell off and we're right back in business. And, we were making new highs at some point earlier in the year, which is just confounding.
It happens so frequently, right? We just tend to get a little bit ahead of ourselves from time to time. And inevitably, Mike, when things shift, the hardest part for us is to take our emotions and say, all right, something different is happening. There's so many traders who are looking at everything that's happened on Friday into the day's open and saying, all right, we're right back to where we want to be. It's a risk on environment all of a sudden again. And yet that's not what's happening, at least in the first 30, 40 minutes of trading today. Even though we had every reason to be exuberant, it seemed as though we had every reason to be based on the headlines overnight and over the weekend. So let's talk about one of those positions that got a little bit of a pop this morning. Tesla got a bit of a pop here. Now, this morning, the reason was Morgan Stanley analysts and Adam Jonas notably named Tesla his new top pick in U.S. autos, highlighting the embattled electric vehicle makers' opportunity in autonomy and robotics as the catalyst for its growth moving forward. That is to say, not cars. So he has an overweight rating on the stock. His 430 price target implies about a 47% potential upside, and we know what price targets represent. They are never a foregone conclusion. So that stands out. But Mike, as does the level that we see it trading at here, that 275 was the gap low from back here on November 6th. I think I remember that date as an election day. Yes, the day after the election became official. So we round tripped it, Mike, all the way up and all the way back. A full round trip here. If nothing else, bulls can at least suggest that as long as it holds the 200-day, they've got reason to stay with a position potentially here.
Yeah, I take this one. I take this as a little bit more of a challenge to try to kind of unpack from the position of prior to November 6th, right? Tesla was based on Tesla's opportunity and growth. Now it's kind of based on Elon's opportunity and growth within the government, right? So again, I think people are using this as an opportunity to trade his unelected position, so to say, and the power that he has within the government. So it's not really surprising to kind of see it get back to fundamental levels, or at least where we took it down before. So yeah, it's got to settle in here, right? We want to see it kind of hold these numbers here, so that we can think about like Tesla as a corporation and its opportunity for growth. Elon kind of aside, which is a challenge, right? I think we talk about idiosyncratic risk at a lot of different levels. This to me is probably one of the riskiest out there, because it really is contingent on one human being's survival, so to say.
I'll tell you what, I think if we were to just rant, just as an example, I think your explanation of idiosyncratic risk applies best to Tesla than any other position in the marketplace at this moment. We are inundated with his thoughts, right? Because he, much like the president, make their thoughts known at will. They utilize X for this purpose, and so maybe we have too much information at our fingertips. Now, what are we talking about from a standpoint of how a trader may approach this? Again, there might be a counter trend risk-reward opportunity here for the bulls, right? You're trading at 297, and if we trade out under 275, you're looking at about 22 points of risk. And if you're looking for upside potential and you think it's the 20-day, well, then you're looking at about maybe 40 points of upside. So you're risking about 20 for a potential to make 40 in theory. That's a 1 to 2 risk to reward. That's not terrible by any stretch. So there's a potential counter trend opportunity here. Nonetheless, making note of it, lots of downtrend resistance, speedy 20-day moving average at which we've been rejected at least, I would say, 3 times. First one here really tested your mettle as you were through the 20 on some intraday basis, but couldn't hold. The next one was even shorter lived here at only 2 days. And then this last one, we couldn't even get to the 20-day before we get rejected. So all of this stands out when I look at the downtrend working in Tesla. It seems notable to me. Mike, anything else as it relates to Tesla, the trend, the chart, anything else you'd like to cover here?
Yeah, I mean, like I said, for me, this is kind of, I want to hold and wait a little bit. I'd like to get a little bit more momentum onto this. Like I said, we've talked about this at length. I think, my style personally, and you've kind of intimated this, for other folks out there, right? Everybody has their own trading style. Hopefully everybody has a really good, strong trading plan and set of rules. One of my big rules is I like momentum, right? And I want to buy into momentum, and I'm okay missing a few points, to kind of make sure that I'm capturing that trend, so to say. It's just, the style of trader. So to me, I'm looking at a little bit more of the liquidity factors over price, so to say. And, price is kind of, is not what I'm trying to solve for. It's the byproduct of hopefully a good trend analysis, a good momentum analysis, and
sure.
Kind of sticking to my plan, so to say.
So what I'm hearing a lot of what you're saying, and of course I agree with much of it. What I want to remind our viewers about is just remember, when we're talking about these ways that traders may approach things, these are merely ideas and examples. Remember, we're not encouraging you to do one thing or another. We want you to have except for having a plan. I mean, if I could say one thing, it is to know how you want to handle your trade, both in a positive and a negative standpoint. That way you are not surprised when one thing occurs. We don't know any more than anyone else, right? I mean, we can take our opportunities as well as anyone else can, everybody. The thing is, the consistency of your process is where you will often be rewarded. So try to be disciplined, try to stay consistent. And beyond that, having an understanding of where it is that you will make your decisions. What are the things that are going to aid you in making those decisions? Mike stated, for some of us, it's liquidity. For others of us, it's as simple as, hey, how does price act around major zones of potential support, potential resistance? If we can incorporate gap levels like we had right here, maybe that is even strengthening to an area of potential support. These are the things that become very important. That's the takeaway we want you to leave with today. Not that we know how you should plan your trades, but rather we know you should plan them. Find those key components for yourself and make sure you adhere to those as frequently and as strictly as you can. That's where benefit comes in the long haul. All right, Mike, a couple other positions that I wanted to cover. We had a...
Hey, Kev, go ahead. Sorry, just interrupt you real quick here. There was somebody kind of going back and forth. I was just looking through the chat here, and I guess the question was about the script that you were using for pivot points. And I think, somebody mentioned that obviously it's not a script, but it is an indicator that you could play with. So maybe just show some folks how you put those on there, and we could talk about that for a second.
Yeah, I can do that. Sure. So Pivot Points is a standard study available within the Thinkorswim desktop application here. So we can utilize the Beaker study icon to launch it. And it's just as simple as, if you'd like to do it, I hate to scroll. So I'm going to just start typing in there. And there you go. Your pivot points are right here. So a quick double click will get it added here. And then once added, you want to make sure that you designate some of these specifics, okay? The default is to auto. And auto is going to make, as an example, I'll change my purple pivot point to auto. Check this out. This is, or at least how it's supposed to do it. If I zoom in, you see how it's all dotted. So this is just kind of the standard process for Thinkorswim. If you don't like the dotted line, the way that I learned to shift that was to make it numerical in Note. So just change that to numerical. Consider changing the style or the colors or the weights of everything. And also, a heads up, R3 by default is not plotted, so you have to put a check mark in. Same for S3. You need to put a check mark in show plot. So that's how you get that added for you, everybody. again, we talk pivot points periodically on this show because I find there's opportunity from time to time when you're looking for short-term instruction, short-term insight to what's happening, but not necessarily helpful if your time frame is longer than a couple of weeks. So don't feel as though this is an absolute for you in any way.
Yeah, I would say, right, I think, me being a little bit more of a novice chartist, so to say, or technical analyst, I think, you want to be using these on more short-term intraday charts, right, to really kind of understand where price action is. You start to look at these over a longer term, and it just does not have the same effect. That's where we want to lean on more of our standard support resistance type of drawings or skill set, so to say, I think.
I think so too. And, that leads me to one final note, at least as it relates to this in general. Look, we talk about this all the time, Mike. You don't have to be taking everything that we cover in terms of analysis, RSI, pivot points, all these other criteria. You can be a simple trader relying exclusively off support and resistance and do just fine. Don't fall prey to the idea that you need more analysis and more tools to make better decisions. I don't believe that's the case. The reason we talk about this stuff is because I've got familiarity with it. And these are lines and details that a lot of traders will utilize, a lot of these studies. That doesn't mean you have to use them, okay? So don't walk away with the beliefs that what we do here on a day-to-day basis is an absolute for you in any way. All right, last thing we're going to get to today is an upgrade today on Chipotle, CMG in my backyard. Chipotle got upgraded by Morgan Stanley over the weekend to overweight from equal weight. New target here at 70, up from 65. The firm says Chipotle is a quality large cap growth compounder with the flat stock price relative to the last 12 months, noting that an entry point has presented itself, the analyst tells investors in their research note. Again, this from Morgan Stanley. So nice pop, questionable about the location of said pop, Mike, as it runs right into potential former support, now potential resistance, coincident with the 20-day moving average there in orange.
Yeah, not really surprising. I mean, it's a pretty good move back towards that retracement there, and kind of didn't quite get as low as it did back there. It looks like August, September, you're kind of see some of those lows that are in place there. So again, not really in the middle of the range, but we're making our way towards the middle here a little bit, and you see that 200-day moving average being crossed over there by the 50, right? So that's definitely something we'd like to see those lines start to diverge and move a little higher, so to say, from a momentum or trend point of view.
In an ideal world, yes. If you want to be bullish on this, it might still have a little bit more time to go. And I'm just reminded that instances like this, Mike, the 50 crossing the 200 to the downside, these don't correct quickly, right? Yeah. It takes a while. So just be aware that we might be looking at the development of a longer term downtrend. That is a possibility we can't ignore. In order for us to feel a large bit better than that, we're going to have to at least capture the 20-day and at some point recapture the 50-day. So oftentimes I bring this up because, Mike, it rarely, if ever, works in our time frame. Our time frame is always much, much faster than the market is likely to allow.
Yeah, I bring this conversation up a lot, right? Like what we're looking at realistically, we're looking at charts, right? We're just looking at all the statistical variables of the price and all this movement of momentum. So to your point, right? Just trying to remind folks when we're thinking about this, again, we're looking at a daily chart here. So 20 periods, right, is relatively about a month's worth of trading, give or take, right? We have about 20 trading days in a month. We're looking at a month, a quarter, and then 3/4 of the year. So to your point, those longer moving averages are much, much slower, unless we get some really, really outsized pricing, which, would be challenging from a Chipotle. So I would expect it to keep making these a little bit more measured moves with maybe these, short-term kind of pops on this type of news. So the upgrade is great. I don't know that it's really digesting the upgrade as well as we'd like to see. And then, like I said, we want to see this kind of turn positive on the day a little stronger.
We sure would. Mike, great to have you back, man. Like I said, been a little bit since we've been able to reconvene here, but I appreciate you joining and sharing those thoughts and insights with everyone today.
Yeah, my pleasure, Kevin. Always fun to be on the program.
We love having you, and thanks to all of you. Big thanks to Connie Hill in chat today, of course. Excellent job keeping everybody aware and answering a bunch of questions. Make sure you're following Connie and me on X, everybody. Hit that thumbs up button for us down below. We'll get this one reviewed and available in the archive for you as soon as possible. But your assistance with the thumbs up helps us quite a bit in the YouTube algorithm. So thanks for being here, everybody. We hope you have a fantastic Monday. We look forward to seeing y'all again real soon.